These are 5 stocks that our community members right here who engage every single day talking about companies have requested for us to go through. We're going to go through these 5 stocks, very high level, just some generic ideas of what we think to look at, observations of the company. But I want to let you guys know one thing. This makes me so happy. Look at all the red today. So happy. So I'm going to be in a good mood making this video. Stock number 1, TXN, Texas Instruments. Mo, why don't you take a look real quick and tell me what you see on TXN that you love?
Okay, I used to have a TI 83 Plus.
Come on, we all did.
I didn't know how to use it for anything except for games, but...
Did you have Drug Wars?
No.
Oh my God, how did you not play Drug Wars?
I had baseball.
No, we played Drug Wars and the Snake one.
I don't even know what that is. I know
oh my God,
one.
the Drug Wars was great. You'd literally be a drug dealer selling drugs to, people.
That's good. All right.
I was going to say something else.
So market cap is 144 billion. Enterprise value is 149. Not a lot of debt.
Not a lot of debt. That's really good.
Like that.
Look at that. Look at that 5-year return on invested capital, Mo.
Wow, that is high. That's one
very
of the higher
high.
companies that we've seen out there.
Correct.
Now they pay a dividend of 3.1%. It's about 4.5 billion. And look at that 5-year free cash flow.
So guys, what Mo's saying here is everybody falls in love with dividends. I'm on Twitter. People are like, we are dividends. We love dividends. You got to remember the dividends have to be compared to the free cash flow. That's why we put it here. Guys, that's a big percentage of the free cash flow.
It is. Let's go back here.
Now, with that said, Mo, if they don't have much room to reinvest and the stock isn't cheap enough, I get that.
It's true.
But boy, that's a big chunk of it.
Now, what is
and they have no debt.
So their PE's just a little bit under 19. So
right.
I wouldn't say that they're...
Screaming deal.
Yeah, exactly. Good profit margin, about 41%. 5-year profit margin, 40%. I mean, they're really... Consistent profit margins. Look at the gross profit margin, 66.3%.
I know, it's huge.
That's awesome.
And this is their 8 pillars. The only X's we have here are free cash flow growth is down, even with net income up. So I wonder if there was a fluke in there.
Yeah.
And then the price of free cash flow is higher than we'd like it to be. So for me, guys, my opinion on Texas Instruments is it's not like there's a growth potential here. I look at it going, for me.
I'd be patient.
Yeah, that's it. If all of a sudden, the 52-week high is 202. The all-time high is 202, 2 years ago almost. And now it's at 158. If it starts to get, if there's a market sell-off, this is probably going to get my attention.
Yeah.
All right, stock number 2, BMY, Bristol Myers Squibb. Now, this is Mo's area. I don't really like to get into pharmaceuticals because I think it's all about pipeline, guys. What are the drugs in the pipeline right now?
Yes.
All-time high of $81 back in December of last year. Mm-hmm. It's currently at $57.69, which is basically a 52-week low.
Right. Market cap of 121 billion, enterprise value of 174 billion.
Mm-hmm. Low return on invested capital.
Very low.
Look at this return on invested capital, guys. This means that the company gets about an average return on the money they invest in their business. The market average is about 9 or 10%, which is also the market average for stock returns. Yeah. So coincidence.
I think this is something that really drives people to it is the dividend. About almost $5 billion paid in dividends. Now, it seems like they can, about half their free cash flow, maybe a little under half their free cash flow, but that's something that keeps people coming back.
Speaking of free cash flow, Mo, net income last year, $8 billion. 5-year average, $3 billion. Ooh. Free cash flow last year, 10.7.
I like it.
5-year average, 11.2. Guys,
I like it.
I like it when the free cash flow is a lot bigger than the net income for 2 reasons. 1, it shows me there's probably less likelihood of fraud occurring or like them manipulating the numbers. But 2, nobody ever looks at free cash flow. The average investor is only worried about net income. Mm-hmm. This can show me like, okay, they have money to sit there and do something with it.
So their 5-year profit margin is 7.7%.
Yeah, look at this 1 year.
1 year, 17.6.
Was there like, what happened that year? Was there like a one-time gain on sale of an asset? Operating interest, no. Pre-tax income from continuing, nope. What's the reason?
That's because that's a big jump.
Big jump. Big jump. Well, the research and development expense was down about $2 billion.
So the big thing about this space, and not just Bristol Myers, but anything, you have to understand their pipeline, see when things are coming off patent, see when competitors are going to start coming in. See how much money they're driving from certain drugs. Yeah, so this is a big one in the community. Our community loves pharmaceutical business. And guys, guess what? If you get a company like Bristol Myers or Pfizer gets the next Viagra, you can ride that thing for 20 years. Oh, yeah.
Was there a pun in there somehow? You can ride that thing. When I said Viagra, you can ride that thing for 20 years?
Yeah, you nailed it.
Should I say you can ride that thing for 4 hours? I got Mo to giggle. All right. Company number 3, American Airlines AAL. So American Airlines, airline industry is one of the worst industries in the world. American Airlines has probably declared bankruptcy 84 times in the last month. The world's largest airline by scheduled revenue passenger miles. For the record, I love American Airlines. I fly them for regularly. Do you?
I fly them when I have to.
I like Delta, American Airlines, and United.
Going to Dallas, it's convenient.
So I'm going to Dallas next weekend.
Oh, are you?
And I'm going to be taking American Airlines. And I go to Dallas before Mexico, taking American Airlines.
Yep. As of January 2023, American Airlines maintains the #1 market share of U.S. airlines.
Good for them.
Would not have guessed that.
No.
I would have said United.
Look at all these numbers. Negative, 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 negative. Guys, my personal opinion is if you want an airline, stick to one of the smaller ones, like Southwest. I'm more bullish on Southwest because of their issues lately, their temporary issues. That's my personal opinion. American Airlines, these companies, go ahead, Mo.
And I think this is important. I just said they maintain the #1 market share. Just because they're #1 as far as delivering people around it doesn't mean that they're the best financial decision or the best investment. So make sure that you know that. You don't just go and say they're a great company because they're #1. Doesn't work that way.
I am #1.
Nelly's
great. Boy, their free cash flow is just poop in the butt. Ugh, guys, come on. I love you guys in the community. Have all the conversations you want about American Airlines. It's hard enough for me to buy any sort of airline, but American. I think Southwest is a better option. That's my opinion. It's pretty close to COVID lows right now.
Probably Southwest, Alaska Air.
Alaska Air, yeah.
So.
All right, stock number 4, Atkore, ATKR. Atkore, manufacturer of electrical, mechanical, and safety infrastructure solutions. Profit margin 21%, 5-year profit margin 17.5%. Net income and free cash flow are pretty similar. No dividend. Really high return on invested capital, 27%. The question is, can they still reinvest at those high levels? PE of 7. Price of free cash flow of 7 seems cheap.
So interesting point about return on invested capital.
Yes.
They've grown their return on invested capital from 14.13% in 2019 to 37.69.
Wow.
While long-term debt has fallen.
So here's what I'll say about Atkore. The semiconductor industry has skyrocketed lately. Is this a permanent plateau? Well, we're already seeing a decline year over year from June 2022 to June 2023 year ending. Before COVID, 1.5, 1.5, 1.75, 1.9, 1.8. So the question is this 3-point-some level permanent? What are analysts saying about it? Let's see our buddy, the analysts. The analysts are saying it is permanent.
They're not going very far out.
No, they're not. Well, it's a smaller company. What's the market? It's only a $5.5 billion company.
That's true.
Now, could they buy back shares? If they buy back shares, can they make, it's an 8-figure stock. It's an 8-pillar stock. Look at this, Mo. Did you know this?
Did not.
Look at that. They're buying 18% of their shares back in the last 5 years. Cash flow growth, low PE. This is pretty interesting. The only thing I'd ask is this a permanent plateau? Are they just going to grow from here?
They've been buying back a lot of shares. In 2015, they had 61.5 million shares outstanding. Today, 38.
Wow.
Yeah. So they're buying back a lot of shares.
This keep you good capital allocators. And guys, remember, when they buy back shares, you don't need the stock to skyrocket in revenue and profit. You can still make a lot of money by buying back shares as long as they're done at the right price.
Yeah. Yep.
All right. Let's do a stock analyzer on this thing. Let's look up what we did before. I'm just going to look up what I did in the past.
So I did this in February.
I did this in September. You were on your luxury trip.
I was.
Revenue growth. I did 3, 5, and 7%.
Okay, I had 3, 6, and 9. I don't remember why.
Profit margin, I did 10, 11, 12 because I thought it would be more stabilized. And I did PE and let's see.
What's your number?
I have a low of 96, a high of 150, a mid price of 120. But look at my PE. I put PE of 8, 11, and 14. I put free cash flow margin. I basically ignored the last 5 years and just focused on the 10-year number. So I could be very conservative here, guys. And look at my prices. 96 low, 150 high, 120 in the middle. I don't know. Maybe I'm going to add it to my watch list at 120. It's not a company that I'm dying to own. No. However, If there is stability there and they can buy back a ton of shares really cheap, this could be a multi-bagger in and of itself.
Yeah, exactly.
Potentially, right?
Yeah.
All right. Final company.
Pfizer,
PFE. And guys, look at our videos back when COVID was happening. We said, is this revenue a permanent level? Well, look at this. Before COVID, 53, 41, 34, 55, 101, 78. It's already declining. But Pfizer needs more money, so they're trying to get people to do more and more vaccines. I'm hearing more and more people getting vaccines. Look at their profit. Oh my gosh, it's absurd. Profit in the last 5 years has averaged $18 billion a year. Guys, the only reason I'm staying away from Pfizer is because I don't think it's stable yet. I look at it going, how much of their revenue is still being driven by COVID? Is this going to be a permanent thing where people just get COVID vaccines every single year? That's been talked about, just like the flu shot, the COVID shot, whatever it is. I don't know. Maybe it is. Very low return on invested capital. I don't know what their pipeline's like. I think you got to buy this thing cheap.
They did hit their 52-week low.
That is true. I've been getting a lot of comments in the community to me saying, Paul, Pfizer's hitting the lows of the year. I'm like, I get that. Don't get me wrong. And look at this, Mo. Look at the 5-year chart. It's at prices we saw at the beginning of COVID.
Yeah.
It's below. So I look at it going.
For me, it's an avoid. It's just too much unknown. I don't like too much unknown.
To me, it's not the too much unknown. To me, it's more of the
pharma space.
What was that?
Especially in the pharma space.
Well, pharma has a lot of unknowns, but I look at it just going, I think, now granted, the good news is, let's look at the analyst estimates. See what analysts are expecting for revenue. It's got to be declining. It's not. Why is it not declining? Why is it not declining? I don't get that. I don't know how they go from record revenue to staying. I mean, yeah, dropping 34% from last year, but the analysts have them staying the same and going up from there. Maybe so. Guys, I'm not trying to be a party pooper, but I look at this going, there's so many other great companies out there that have more. Warren Buffett and Charlie Munger always say, when we buy a company, we want to say, can we reasonably assume what they're going to make in the future? Literally, I would not know if this company is going to do $50 billion in revenue, $30 billion in revenue, $90 billion in revenue for average of the next. I have no clue. And for that reason, I just choose to stay out. But that's not my area of expertise. If you know the area of expertise, go do it. So guys, in our community, we're very active there. We take these recommendations very, very seriously. We like to look at it. We engage every single day. In this video alone, I got a few messages that was popping up. Now, I talk about the community a lot, and obviously, there's something to it. So I'm not asking you to make a yes or no decision right now. What I'm asking you to do is make an informed decision. And the only way to do that is to be on the inside, not on the outside. And the only way to get on the inside is to use the software. Just like if you're going to buy a new car, you're going to take it for a 15-minute test drive to check it out. I'm asking you to do the same here, but we're giving you a full access, no limitations, 7-day free trial test drive. All you need to do is go to everythingmoney.com, click the link below, go sign up. All you need is your email, go sign up, get your 7-day free trial. If you don't like it, not offended, move on, keep watching our videos, keep learning. Maybe it's for you down the road. But if you love it like I think you will, like the thousands of other people who do, sign up at the end of 7 days. You'll love it. Thanks very much, guys.